All right, so let's talk a little bit about the accounts or the T accounts. Now, in the real world, you use what's called a ledger card. And at one point, we'll look at a ledger card, or it's called the ledger. And each account has its own ledger. Cash has a ledger, equipment has a ledger, accounts payable has a ledger. They all have a ledger. And in that account or in that ledger, it shows all the details that have brought that account to the balance that it is. Now, when you're learning accounting, we use what's called a T account. It gets you to the same place, but the reason why we use it when you're learning accounting is because you're learning the debit and credit rules, and it helps you to learn how to do it properly. So if we look down here on the bottom right of the screen, if you can see that, it says account name at the top, and then you'll see the left column is the debit column and the right column is the credit column. So where it says account name, you would have one of these for cash, one of these for every account. Every account that you did on the financial statements would have one of these accounts. Okay, there's one for every one of them. Let's see. So when we look at the accounts, one thing to remember is that when we're doing accounting, we do what's called a double entry system, So that means that we are going to debit at least one account and we're going to credit at least one account. Now, you could debit more than one account and you could credit more than one account, but your debits and your credits have to equal. Okay, they have to equal. Now, the majority of what you'll do in this class will be one debit and one credit. You will have a few things where you might do two debits and one credit or something like that, but very, very few, okay? And it's going to be mostly in this chapter. So an example of this might be, this is an example of it. Let's say that you were going to buy a piece of equipment for your company. You were going to buy a truck, okay? And you were going to get a loan for that truck. So I'm going to take you through a process of learning how to ask yourself questions, right? And the first question you ask yourself is, who am I? Well, you are always the company, right? And when you get to some of the chapters, knowing who you are, like are you the buyer or the seller, is very important because the transactions are done differently on different sides. So I say, who am I? Well, I am the company. So my first question is, what did I get? Well, I got a truck. I got a piece of equipment, a truck. Okay, well, what kind of thing is a truck? Well, a truck is an asset. What kind of a balance does an asset account have? And we haven't learned this yet, but an asset has a debit balance account. So how do I make a debit balance go up? I have to debit it. So debit plus a debit makes a bigger debit, right? So my first step, I would debit the equipment account for the cost of the truck, let's say $10,000. And then let's say I got a loan for it. So then I would say, well, what else did I get? Well, I've got a liability now. I've got a liability I have to pay back. And my liability is a notes payable. And what kind of balance does a liability have? A liability has a credit balance. So how do I make a credit balance go up? I have to credit it. A credit plus a credit makes a bigger credit, right? So now I have to credit accounts payable, $10,000, or notes payable, $10,000. So now my debit's $10,000 and my credit is $10,000, okay? Now let's say that I actually paid $5,000 or $2,000 in cash. So I put $2,000 down and I financed the rest of the truck, right? So I would still debit equipment, $10,000, because I got an asset. To make that asset go up, I have to debit it. So I debit equipment, $10,000. I would then credit cash, $2,000. Cash is an asset. Assets have a debit balance. If I pay $2,000, that means my cash is going down. So I'm going to credit cash $2,000. And then I have a loan for the rest and notes payable for the rest for $8,000. So I'm going to credit notes payable $8,000 to make that go up. So now I've got a debit of $10,000 and I've got a credit of $2,000 and a credit of $8,000. And $2,000 plus $8,000 equals $10,000, right? So that's where the debits and credits have to equal. That's just kind of one example. And we'll look a lot more at that. It's just kind of getting you a little familiar with it. All right. So this is also going to show you on this slide here about how you balance the accounts. So what happens is that the balance always goes on the side that has the higher amount, Now, here's a trick in this class. This is not true in the real world, but in this class, all of your accounts are going to have the balance on what their normal side is. We haven't learned about what the normal side is yet. I talked a little bit about it, but it's going to go on what the normal side is. Okay, so you're never going to have the balance on the non-normal side. If you have it on the non-normal side, then you did something wrong. Okay, but here's an example here. So they're showing you that if you look at this T account here, transaction 1, 2, and 3, right? So on the debit side, 10 plus 8, 10,000 plus 8,000 makes 18,000, right? On the credit side, we have 3,000. Which side is bigger? Well, 18,000 is more, right? So what we're going to do is we're going to add 10,000 plus 8,000, that's 18,000, and we're going to subtract the credit side of 3,000. That'll give us our balance of 15,000. Okay, and again, we're going to go over this a lot more. This is more just the informational piece. All right, now if it was a credit balance account, we look at this and we see we've got on the debit side, we've got 10,000, right? On the credit side, we have 8,000 plus 3,000. That makes 11,000. So the credit side has more on it, right? So now we're going to subtract 10,000 from the 11,000, and that's going to give us a credit balance of $1,000. All right. And again, we'll go over that more. Okay. So I'm doing a recording. I'm going to stop this recording here.